just starting with that, why do you think we're kind of seeing this dynamic play out?
There's a real dichotomy between the haves and the have-nots in the tech sector right now. What you're seeing is that those tech companies that are really leveraged to the AI theme continue to do quite well, whereas those semiconductor chip companies that maybe are more geared towards the old economy, to the autos, to more of the analog and industrial sectors of the economy, have really underperformed relative to, the very advanced chip node AI companies. And so this dichotomy has played out throughout the entire year. It continues to play out. What's been interesting is as we've moved through third quarter earnings season, we've heard more of the same from many of the chip companies, which is everything related to AI is doing extremely well. On the other hand, the industrial cycle continues to be a laggard. And if anything, it's actually been pushed out. Whereas many of the chip companies coming into the beginning of the year expected the auto sector to turn, the industrial sector to turn, in the second half of 2024. Now it's been pushed out to the second half of 2025. And so we're really continuing to see more of the same play out. And all of the money is just flowing into everything AI related. And that's why this dichotomy has emerged that you bring up.
Few businesses better illustrate the idea that long-term investing is the key to life-altering stock market profits than Nvidia. You would have almost $267,000 today if you had purchased $1,000 worth of the chipmaker's shares 10 years ago, representing a 26,600% return. However, past performance is no guarantee of future outcomes, particularly in a highly speculative new industry. To find out if the venerable tech behemoth still has multi-bagger potential in the long run, let's look at the advantages and disadvantages of Nvidia stock. Creating and marketing graphics processing units, GPUs, a kind of computer chip with parallel processing capabilities, has long been Nvidia's main business. In the 2000s, Nvidia dominated the custom PC and gaming laptop sectors thanks to this technology, which was essential for producing visuals in video games. GPUs discovered a new application in cryptocurrency mining with the advent of Bitcoin in 2009, which sparked Nvidia's second boom cycle. Many blockchains at the time employed proof of work, POW, which involve using GPU processing power to confirm their networks and issue additional currency. In 2022, this market had a significant decrease, depleting Nvidia's market capitalization by billions. Nvidia's gaming division, which reported third-quarter revenues of only $3.3 billion, or about 9% of overall sales, includes both video gaming and cryptocurrency mining hardware. The company's data center sector has exploded to account for 88% of overall sales, with generative artificial intelligence, AI, emerging as its most recent boom cycle. Due to its lack of diversification, the corporation is susceptible to another abrupt shift in its fortunes. The expansion and financial success of Nvidia's AI hardware division may be threatened during the ensuing 10 years, and it's easy to understand why. Nvidia sells hardware at software-level margins with a 75% gross margin. For comparison, the massive software-as-a-service, SaaS, company Microsoft, which mostly sells digital goods and services, has a gross margin of only 69%. Because of Nvidia's market dominance, consumers will inevitably replace its goods whenever feasible. Although it appears that Nvidia can fend off direct competition from other AI chipmakers like Advanced Micro Devices, hyperscaler customers like Alphabet and Amazon are still able to design their own custom chips or simply hang on to their outdated Nvidia hardware rather than purchasing the newest models each year. Suppliers like Taiwan Semiconductor, which assists in the production of Nvidia's most expensive AI processors, may also put more pressure on the company's already exorbitant margins. Morgan Stanley analysts stated in June that the company is thinking of increasing Nvidia's production fees. Furthermore, if this is accurate, it may eventually reduce the company's profit margins. To be fair, though, Nvidia's operating income for the third quarter jumped 174% to $18.6 billion. Furthermore, given this growth rate, its forward price-to-earnings, P/E, ratio of only 33 appears to be very low, indicating that a potential slowdown in earnings growth may already be somewhat priced in. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
What does it all mean for the tech trade? Our next guest is still bullish and thinks there's plenty of upside left. Deepwater Asset Management managing partner Gene Munster is here, along with our own Steve Kovac, who's on set with us. So, Gene, kick things off. What do you think we learned this week?
Kelly, I think we learned a lot. I think we learned a lot in terms of the sustainability of the AI infrastructure trade. Of course, Broadcom focuses on custom silicon, which is different than NVIDIA's GPUs, but the storyline that this is going to run out, the AI infrastructure is going to dramatically slow next year, essentially is a strong data point that this is going to be growing faster for longer. And just want to quickly put some numbers around that, is that if you take Broadcom's 2027 guidance, which is remarkable that they're stretching out that far, but 2027 guidance, it basically implies about 60% annual growth. Right now, investors are expecting Nvidia to grow in 2026 at around 21%. And so I think that that's one piece that we learned this week. The second is that the pace of AI innovation continues to be rapid, of course, with Google coming out with Gemini 2.0. And so this is a big week for AI.
Steve, would you differentiate for us between NVIDIA on the one hand and Broadcom on the other, and why people have become so currently excited with Broadcom? The numbers, the earnings, the report this week, good.
Right.
Not kick-ass great, but
well, there was
good.
also this report earlier in the week that Broadcom's working with Apple now to help them do some artificial intelligence chips. So it's a different, yes, to your point, NVIDIA makes those GPUs, they're more expensive, but Broadcom has become this player that companies go to. Google, by the way, is using Broadcom to make their artificial intelligence chips as well. Now, reportedly, Apple is getting in on that as well. That makes it really exciting. And these are, of course, the ones that run in the servers for training their AI models. What's really interesting about Apple, at least what we've learned so far, what they've publicly disclosed so far, they've been using these alternative chips to train their Apple Intelligence stuff. They've been using chips from Amazon. They've been using chips from Google, which, by the way, like I said, Broadcom has a hand in helping make those. What they haven't been doing is running out there like Microsoft and Meta have been doing, and Google to some extent, buying up gobs and gobs and gobs of NVIDIA chips and putting them in a server farm somewhere and training their AI models. They've been renting these other alternative chips. That doesn't mean they're not using NVIDIA, but it does mean, at least what they publicly disclosed, they're looking at these alternatives, and it's pretty impressive. They've been able to do this and launch Apple Intelligence in the way they have without spending as much as some of the rivals have.
Although
Time in the market is usually preferable to timing the market. Additionally, if you held onto your shares for a sufficient amount of time, you would have made money even if you purchased Nvidia stock during the height of its prior boom cycles. Nevertheless, Nvidia has grown to become the second largest corporation in the world with a market valuation of $3.5 trillion. Therefore, things might have changed. According to Newton's second law of motion, an item requires more force to move the larger it is. Furthermore, even if the physicists of the 18th century most likely did not have financial markets in mind, the idea can nevertheless apply to equities. By purchasing Nvidia now, investors are assuming some extremely positive things about the AI sector's future. Additionally, it could be wiser to hold off on purchasing shares until the excitement subsides. Discover the accelerated growth stock that will reach $20 trillion by 2031. Wall Street analyst claims that artificial intelligence, AI, has existed in one form or another for over 50 years. But the technology advanced to a new level with the introduction of generative AI early last year. Numerous time-consuming tasks could be streamlined and automated by these self-learning, continuously improving algorithms. According to experts, the fourth industrial revolution will be ushered in by the ensuing increase in production and efficiency. Nvidia has arguably benefited the most thus far. The graphics processing units, GPUs, that produced realistic images in video games were invented by the business. The processing power required for this computationally demanding activity was provided by these CPUs. AI was similarly well powered by GPUs, propelling Nvidia into the stratosphere. Since the beginning of the year, the stock has increased by almost 800%, making some investors question whether it is now too late to purchase. Don't worry, one Wall Street analyst believes Nvidia has what it takes to become the first $20 trillion corporation in history. That suggests that the stock might rise by around 500% from where it is now. Is that possible? I'll describe Nvidia's journey to prosperity and the factors that might propel the stock to these undoubtedly high levels below. The key to Nvidia's success when it released the GPU in 1999 was parallel processing, which allows for the simultaneous execution of numerous mathematical operations. This allows a computationally demanding operation to be completed considerably more quickly by utilizing many processor cores to focus on separate portions of it. Nvidia quickly brought AI into the 21st century by using the same methodology. Although Nvidia's GPUs garnered most of the attention, the company's success is largely due to more than simply its processor. The business created the Compute Unified Device Architecture, CUDA, a programming platform and software architecture that enables programmers to take advantage of the GPU's power to accelerate applications. It has become the industry standard and is used by a whole generation of developers. Using the CUDA platform, NVIDIA provides more than 400 libraries to assist developers in creating, refining, deploying, and scaling applications on PCs, workstations, the cloud, and supercomputers. In a wide range of applications such as gaming, cloud computing, machine learning, an older subset of artificial intelligence, and data centers, NVIDIA's chips are the industry standard. Furthermore, CUDA has a strong foundation in the computing sector. A moat that is difficult to breach is produced by that combination. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
What upside then looks like for these handful of stocks that have been leading the rally now for so long?
So I think what you continue to see is quarter after quarter, you've seen positive revisions to the AI sector, and they continue to see more growth ahead, more demand than they're even able to meet. And their constraint is on the supply side, not on the demand side. So I think that this is really a secular trend that's going to continue, at least for the foreseeable future, the cyclical horizon. And I think 2026 is going to be 2025 is going to be another good year for the AI levered names. You've started to now see some of the leadership switch just from the semiconductor chip companies to more of the software developers, the enablers for AI. And so as an investor, we're starting to look more at some of the software companies, not just the chip companies, which are trading at very high multiples, certainly can leave them, room for some disappointment. But I would be buyers of any weakness that you see in some of these AI chip companies, but also start to turn my attention to some of the software enablers.
At the moment, NVIDIA has a market valuation of about $3.63 trillion. To raise its value to $20 trillion, the stock price would need to increase by 495%. Wall Street estimates that NVIDIA will make around $129 billion in fiscal 2025, which would translate into a forward price to sales, P/S, ratio of about 26. To support a $20 trillion market cap, NVIDIA would need to increase its revenue to almost $768 billion yearly, assuming its P/S stays the same. Over the next 5 years, Wall Street now projects that NVIDIA's revenue will expand by 50% yearly. By 2030, the company's market capitalization might reach $20 trillion if it can sustain its strong growth rate. That may sound audacious, but if the last several years have shown us anything, it is that the adoption of AI may be surprisingly positive. For NVIDIA to reach this milestone, I believe a lot of things would need to go perfectly, and I must say that maintaining that growth rate for 5 years might be difficult. One Wall Street expert, though, is beating the table. According to Phil Panero, the founder and former CEO of Boston consulting group Platinian, Nvidia will undoubtedly reach $800 by 2030. A market valuation of $19.59 trillion, or almost $20 trillion, would follow from that. Three factors, according to the analyst, might propel Nvidia past the $20 trillion mark. As of right now, no one. AI penetration is less than 1%, according to Panero. A few more percentage points of AI adoption might enable Nvidia, the industry standard for AI, quadruple its current valuation. No two. By 2030, it is projected that the adoption of Web3, an online system supported by blockchain, will cost around $10 trillion. That is an extra $9 trillion in opportunity, given that less than $1 trillion has been invested thus far. Since blockchain relies on GPUs, Nvidia stands to gain from making the switch. No three. The duty of identifying and removing waste in government will fall to the planned Department of Government Efficiency. According to Panero, this might completely change the way government is run and provided. The development of digital twins for government infrastructure as a means of identifying waste and boosting productivity is one possible use. This also helps Nvidia because GPUs power digital twins and the metaverse. Panero thinks the enormous opportunity presented by the quick adoption of AI, the shift to Web3, and possible applications by the U.S. government would help sustain the 50% yearly revenue growth required to sustain a $20 trillion market valuation. Although the analyst makes a strong argument, it fails to take into account the harsh realities of the real world. Do not misunderstand. I have been an investor in Nvidia for many years, and the chipmaker makes up 11% of my portfolio, making it my second largest investment. I therefore hope the business succeeds. I'm also aware that the road ahead will be difficult. Do you recall last summer, when news sources indicated that the debut of Nvidia's next-generation Blackwell processor would be delayed, causing the company's stock to drop 27% in just 6 weeks? In the end, it proved to be a waste of time, as the stock eventually reached unprecedented heights. A little over 2 years ago, during the economic slump, Nvidia also had a 66% decrease, which rattled many cautious investors. Because Nvidia stock isn't for the weak of heart, investors should be ready to stick onto it for the long haul and possess the resilience to endure the ups and downs that come with the price tag. As of right now, Nvidia is selling at about 31 times their fiscal 2026 earnings, even if it's a small premium. I think it's a fair price for a business with so much promise. Nvidia is therefore a good investment. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.